Today, we're going to be talking about trends to watch out for 2022. For those of you who are expecting my colleague Ben Kent to be joining me today, I'm sorry there's a bit of change to the build program. Ben, unfortunately, is unwell, so won't be joining the presentation. So I'm going to be taking you through 6 trends to watch out for 2022. This is based on our extensive client research over the last 12 months. Using that to look ahead to what that might tell us about what's to come for the next 12 months, as well as wider market data and other observations from recent conversations and client engagements that we've had. So it's really a collective pool of data, insight, experience, wisdom that we've condensed into 6 big trends for 2022 that we think should be on everybody's radar. So what are those trends? Well, let's take a look. The first one that we've identified is what we're calling the multi-segmented recovery. So we know that economically, conditions still remain challenging, and actually the picture ahead is going to be more complicated perhaps than it looks on the surface. The second trend is around client experience. And what we've described as the client experience bounce that we've seen certainly over the last 12 to 18 months is beginning to tail off. We're going to take a look at what that means in context for professional firms. A third big trend that we're seeing is a shift towards specialism and also increased demand and spend on specific advisory services. Again, we'll be taking a look at what that means in context. A fourth big trend is around rethinking digital propositions. This isn't necessarily something that's new for 2022, but we anticipate accelerated thinking and development in this area. Fifth, ESG, unsurprisingly, a big topic of interest this year. We're going to take a look at what it might mean for professional firms in 2022 and beyond. And then the sixth trend that we've identified is around data-enabled opportunity spotting, bringing all of this together to help professional firms be smarter in their targeting and in their campaigns. So I'm going to spend the next 20 minutes or so taking you through some highlights around each of these 6 trends, some data to try and convince you, I suppose, why we think these things are important for the year ahead. The chat function should be open, so please feel free to add in comments and questions as we go along, and I'll also try and make some time at the end to answer any of those that people may have before we leave, and then we'll wrap up by past. So let's dive into each of these 6 trends in turn. So the first one that we have is what we've identified as the multi-segmented recovery. Now, we know from the broad economic data that's made available, and there's some recent forecasts that have just been published. I'm seeing a question about whether the slides will be made available after the session. Yes, we will make video recording of the webinar available, but we can also circulate slides as well. Very happy to do that. So in terms of the economic backdrop, I suppose I'm not an economist, but there's plenty of economic data out there that points to what the road ahead for 2022 might look like. People are probably very familiar with this kind of hockey shape GDP curve. What we're, certainly what people are anticipating is a wider economic recovery, but also at the same time what we're seeing is a tightening of the jobs market, and that's obviously driven by a range of factors, limited availability of the workforce, more competition, more churn in certain sectors. That's fueling wage growth, which is feeding through into inflation. And that's one of the big economic challenges for the year ahead. We're seeing lots of different models there. Some are talking about a peak in very early 2022. Others are looking slightly later in the year, upwards of 5% inflation. And we know that what that means is that it feeds through into price rises. It feeds through into pressure on cash balances, and those organizations that have had a pretty good recovery or a pretty good COVID period over the last 12 to 18 months are going to find themselves perhaps in a more challenging economic situation over the next 12 months. This, of course, is coupled with things like rises in employees' national insurance and other rises in corporation tax, which again will put pressure on finances. But what we're seeing from our own research, so Meridian West, we are regularly interviewing buyers of professional services. We run a syndicated piece of research called Business Buyers Barometer, takes the pulse of business leaders throughout the course of the year about what's on their agenda and how they're using advisory firms. And what we're seeing from the latest round of that research is that many firms are or feel like they're doing better than they were 18 months ago in terms of sales, in terms of profit margin. But you can see from the chart on the right of the screen there that that's by no means universal. And actually what we're seeing is kind of three broad segments emerging. So those who actually have had a very difficult pandemic period, retail, aviation, hospitality, those sectors that have seen demand, certainly during lockdowns, decrease, and also a segment who actually have kind of ploughed ahead. You know, they've been pretty resilient so far, but with further challenging conditions coming, may feel actually more of the impact in 2022 and beyond. But also those who have benefited, and largely through investing in kind of new data, technology, new ways of engaging with clients, shifting their business model. A couple of questions have been asked about the data. Is it UK? What's it telling us? Specifically, the data I'm showing you from our Business Buyers Barometer is based on UK data. So we interview 500 buyers of professional services each quarter, and that data is UK only. What again we've seen from the latest iteration of that is that there's been a shift over the course of the pandemic period away from crisis management, so simply firefighting, getting through that period, to much more of a growth focus, balanced or offset with a need to become more efficient. So certainly these twin track priorities have really risen up the agenda over the last 6 months, a focus on return to growth, but balancing that with looking at ways of reducing cost, taking out complexity, or simplifying operations. And we see that as well in the areas that businesses tell us that they're going to be investing in. So a big one that's come through in the research again is around technology. So you can see at the top of the slide on the right, the two areas that certainly get the most focus in terms of being essential or important as people come out of the kind of challenges of 2021 is around investing in technology, both from the point of view of increasing operations and efficiency, but also finding new ways to engage with customers. And we see that across a whole range of industry sectors, have been smarter about how to offset or rebalance some of the decrease in in-person footfall, for example. So a real move towards investing in technology, and we see that very much as something that's going to be accelerating for 2022. What does that actually mean for professional firms? So I think, you know, what we're anticipating is that the next year ahead is going to be challenging economically, but professional firms, I think, if we look back over the last 12 to 18 months, have been talking a lot about, obviously at the start of the pandemic, about COVID, about a new normal, then about recovery. And actually what we're seeing is some of these narratives are in some ways quite oversimplified. And actually we want to, I think in 2022, move away from those very oversimplified narratives around COVID, recovery, you know, return to growth, everything's fine now, into perhaps a more complicated picture that takes into account some of these changing dynamics around the broader economic context, as well as the more structural or transformative investments and changes that businesses are making to respond to some of these long-term changes around customer demand, for example. What this is also likely to mean, and what businesses tell us in our research, is that they are looking for very practical support from advisors to address many of these specific challenges, as well as the opportunities that come from those. So technology was obviously a big one that you saw on the previous slide. But more specifically, I think firms need to be thinking about a smarter approach towards segmentation. If our argument is that the picture for the next 12 months is going to be complicated and not simple, then thinking about how to use more effective segmentation to really understand which segments of the market are growing, which are going to be more challenging in terms of sales and new opportunities, and how to reflect and I guess adjust messaging because of that. So there's definitely lots of opportunity that comes from this, and we know over the last 12 months that actually the professional services sectors, legal, accountancy, other advisory businesses have had a very good 12 months, very profitable 12 months. But I think a need to remain agile and responsive to these changes is going to be important to continue that growth from a professional services sector. That is also going to be dependent on delivering great customer experiences. And the second trend that we've identified is a tail off in what we're calling the client experience bounce. Now, during the initial 3 to 6 months of the pandemic, we were helping a number of professional firms kind of measure their client engagement, their client satisfaction, and how that was changing. And one of the things that we saw was that there was definitely an uptick in the overall satisfaction ratings that we were seeing. And despite all of the kind of disruption and change that was happening, and that was down to a few different factors. Largely, it was due to professional firms actually being generally on the front foot, lots of communication to clients, sharing insights, being very proactive in doing so, helping and guiding people through these immediate challenges that we saw 18 months ago around the pandemic. It was a new situation for everybody. People were looking for guidance, and they were, in some ways, from the client's perspective, overwhelmed by that. There were also kind of experimentations with new ways of engaging, lots of digital engagement, webinars, and new ways that many people found quite novel. Hadn't done virtual parties before, hadn't done virtual roundtables, experimenting to see with what worked. And generally, that meant that more fee earners were spending more of their time reaching out to clients, checking in, making sure everything was okay, seeing if they needed anything. And generally, there was a lot of goodwill that was generated off the back of that. And we saw lots of positive feedback come through from that. What we're seeing now is that actually that bounce is starting to tail back off. And again, that's due to a range of factors. A big one that is coming through certainly over the last 3 to 6 months has been really around capacity. So many professional firms, as I said, have had a great pandemic period financially, and that's because they've been very busy. There's been lots of demand, but they've also, some of them have furloughed staff or haven't necessarily hired and recruited at the same volume of work that's coming through the door. And what that's meant is that people have been busy, heads down, delivering on the work, and perhaps neglecting some of those that wider time for client care. We've seen a tailing off of that regular information sharing, the regular webinars, information that was to do with kind of just getting through the COVID period. We're now back into more of a kind of business as usual type arrangement, although business as usual obviously means something slightly different now than it did 2 or 3 years ago. Certainly a fatigue around Zoom and webinars and things like that, although it's encouraging to see we've got so many people with us this morning. And just a general, I guess, neglecting of some of those service fundamentals. And this is a real challenge, and we see it reflected in the data that we're collecting as well. So whilst what you can see on screen is a kind of aggregate rating, some of the benchmarks we use to measure client experience with the organizations that we work with. And generally, they're getting pretty good or excellent scores around technical competence, quality of documentation, the kind of bread and butter of the kind of core competency. But when we look at some of these other areas like responsive communication, proactively sharing insights, these are areas where we're seeing 20% plus of the client base falling below a good or an excellent rating. So into an average, poor, or very poor rating. And actually, that's quite telling because that size of dissatisfaction is the area that has been growing more recently. And obviously, that's a trend that we'd like to see reverse for 2022. And how is that going to happen? Well, I think revisiting back to some of those service fundamentals and actually spending a bit of time translating what good service looks like in that hybrid working environment. I think more rigor, we're definitely seeing that around satisfaction measurement, and actually a number of firms are now using this period. Things are settling down to think about actually how do we measure client satisfaction and engagement in a more systematic way, making that data more visible and more accountable to senior leaders within the firm. And then off the back of that, systematizing more of the, I guess, the client service promise that comes from delivering great service, translating that into tangible things that they can be then held accountable to deliver. So I think next year we're going to see, hopefully, a stemming of that decline in satisfaction, but that's only going to come from a kind of renewed focus on this in the context of hybrid relationships. The third area, which I think is really exciting, is around targeted advisory spend. And we've certainly seen from the latest research that we've done, nearly half of the business leaders that we surveyed said that they were planning to increase the amount of spend on advisory services over their next budgeting period. Now, I think that's due to a mix of factors, some of which are a bounce back from obviously cutting spend in certain areas immediately as a response to the pandemic. So there is some kind of natural bounce back there. But it's also, I think, a need and a shift towards specific areas of help. And what they're looking for is a real move towards specialist advisors. And we see that again in the data that we have. So we see that almost 2/3 have had some experience of using a boutique firm. And when we're talking about boutiques, we're talking about those specialists who use specialist service providers on things like cyber, data analytics, corporate finance, whole range of areas. And even those who haven't had that experience in the past are generally open to. Almost half of those that we surveyed said they'd be open to kind of using that boutique specialist. And I think the reasons for that are clearly some very specific challenges that we saw coming out of the economic and trading conditions and some of the challenges and opportunities internally within the business, things like cybersecurity, technology investment, a need to kind of look at operational efficiency and some of these other broader challenges. And that's come through very strongly in that move towards specialization. I think the winners from that will clearly be some of the boutique firms. The numbers speak for themselves there, but also those broader firms who have a kind of full service offering, who are really able to establish deep niches within a broader offering. And in fact, the Big Four, despite their size, the Big Four accountants have been very good at developing these kind of deep niches of specialism within a big kind of umbrella of a Big Four wrapper. And actually what we've seen recently is in some of those areas like HR advisory, some of those services are being spun out as kind of independent services away from the main Big Four arm. So there's a lot of movement happening here, but from the demand side, certainly a move towards specialism. And what I think this means for professional firms is a broader recognition of that new competitor set, the attractiveness of boutiques and specialists, and certainly buyers gravitating towards that. I think an opportunity to refocus the language being used around advisory propositions, talking about the specific challenges that we see on the radar that are coming through from the research, but more particularly about what the experience of working with a large established firm looks like within the context of seeking a very specialist technical advice. and then using case studies to generate impact, to generate engagement off the back of that, and smarter use of data analytics, which I'll come on to in a minute or two as well. The fourth trend that we're seeing is very much around digital, and as I said at the beginning, this is really an acceleration of something we've seen over the last 3 to 5 years. This isn't necessarily something new, but it's something that I think is going to have renewed focus over the year ahead. Again, from the research that we've done, we've seen that buyers are becoming increasingly open towards using specialist advisors. So 70% of those that we surveyed in our Business Buyers Barometer research said they'd be happy using or accessing services digitally. The flip side of that, interestingly, is that 2/3 are saying they would want their advisors to reduce fees as a consequence of that. So there's definitely a kind of rebalancing around what value for money means in a digital engagement. But what that means, I think, is that we've seen a whole range of new propositions come up, which are either digital or only, or certainly digitally led, often with a kind of subscription type model. So you're buying into a portal, into a piece of software, often with the intention that the client or the organization self-serves using that technology. So it's a big shift in the model, and that many professional firms have been used to. But there definitely is, from the buyer side, appetite for more of that. What I think that means, though, for firms thinking about treading this path for the next year, is there are some fundamental success factors that need to be considered to get this right. And again, from the work that we've done over the last 12 months, helping firms who've developed or are wanting to test the market appetite for some of these specific digital propositions, some key lessons emerge. Just to touch on a few of these because of the time restrictions we've got, but certainly that piece around the economic model is really important. Delivering that software-led approach is not going to deliver the same profit margins as a high stakes piece of litigation. But there still can be money to be made, particularly if it locks clients into a subscription or a package for a period of time, which can renew. Again, I think the sales and delivery team that are needed to deliver on that are very different than your high stakes piece of litigation or your corporate finance. And in fact, there is a more kind of sales led approach that we're seeing amongst those firms that are trying to scale up those kind of tech-led propositions. And I think the other kind of interesting dynamic is how that actually integrates with the kind of core offering. Is it something that is simply there as a wrapper that helps document sharing and helps facilitate existing processes, or is it something that actually enhances and does more than what they might get from the firm already? So lots to think about there. I think in particular, that appetite for digital and self-service propositions isn't going to go away, even with the opportunity to have more in-person contact with advisors. And I think what that means is that there is going to be a need to think about where the in-person contact really adds value beyond what people are getting from a digital experience. And also it opens the door to firms selling to a wider client base. If you're less reliant on individual relationships, you're less tied to specific geographies or specific markets. And again, we've seen, particularly in the mid-market legal sector, a number of firms being very successful in rolling out some of those propositions, not just within the UK, but globally. I did see a question pop up. I'll address that towards the end. I just want to cover off the last two challenges in the few minutes that we've got. The fifth one, unsurprisingly, is around ESG. It's been a big area of focus this year. Lots of focus and attention around the COP26 summit. Unsurprisingly, we've been working on a number of campaigns with a range of firms. I've just put 3 on the screen here that talk around ESG in lots of different contexts. I think the big things that we've picked up from those are that organizations are starting to take this seriously. It's not just lip service. Many are setting those big, broad goals around carbon reduction, for example, net zero by 2040, 2050, whatever it is. But where the gap then is on actually how that's delivered. So just to go back one slide, the research that we've seen, that we've done has seen that firms or organizations are setting those big goals, but what they haven't always done yet is translate that into action in the roadmap, particularly over this critical next decade. Firms have been very quick to package up service offerings, not just those within the environmental or real estate space where you might expect that, but across the professional services sector more generally. We're seeing a range of services coming up designed to help organizations audit and then implement positive change around ESG. So I think what that will mean for next year is this topic isn't going to go away, even without perhaps the focus point of something like a COP26. There's going to be greater maturation around these services, but also greater competition as more firms realize that there is good financial kind of gain to be made from helping organizations in this space as well. On the flip side, that demand is going to continue. But what I think will be an interesting dynamic is to what extent the attention is also more equally shared on the S and the G in ESG. If you think about certainly all of the ESG conversation that there has been over the last 12 months, I haven't crunched the numbers, but I would suspect the vast majority of that is been focused towards environmental sustainability. But crucially, I think from a professional services point of view, it's going to be very difficult to position yourselves as leaders in delivering these kinds of services if the lens isn't turned internally as well, setting your own ESG roadmaps, being really clear about the kinds of clients you will and won't act for, conflicts of interest, and making sure that you are practicing what you're preaching when it comes to good ESG practice. And the sixth trend, very briefly, is around data-enabled opportunity spotting. And I think what we're seeing is that, off the back of big investments in digital data, professional firms are now in a position where they've got more data and information around clients than ever before: feedback data, financial data, market intelligence, web analytics. But actually, a lot of that data is still sitting in separate silos, is not being integrated to see the bigger picture, and is not really yet being used to drive that smart sales and targeting strategies that we know that other organizations in other sectors are typically more advanced at. So I think what this will mean for the year ahead is greater investment in trying to knit together those data sources, particularly on an account-based level. More use of benchmarking data to actually support campaigns, brand building, and business development activity. And from the most recent piece of work we've done with PM Forum and their professional leaders benchmarking survey, we see a big investment in building data analytics skills and capabilities within marketing and BD functions in professional firms. And again, that trend expected to be one that will continue. So we've got to past. Just to, I guess, recap on these big trends, we see our multi-segmented recovery. I think what that means is firms being smart about their segmentation, agile messaging and targeting about where they really want to focus the growth opportunities. I think addressing that fall off in the client experience bounce, refreshing measurement and strategy, a shift towards specialism, building those niches within niches, and really leaning into specialist track record, rethinking digital, sense checking what the appetite looks like there, building the case. Perhaps it's a different economic model than the core service proposition for your firm at the moment, but how could that enhance what you currently offer to clients? Seizing the opportunity around ESG before that space becomes too crowded, but actually going beyond those simple diagnostic tools into helping firms actually address the actions required. And on the data front, that integration of smart data and analytics.